Hi and welcome to Pleasant Trading. My name is Robinson and today we'll be looking at multiple time frames. I use 4 time frames when I'm trading. I know a lot of traders will probably just use 1 or 2, or some traders just use one time frame. I like to look at what's happening on a very small level and also the big picture. For example, if you're in a trade, you take a good trade and you don't know if the trade you're in, you should probably get out of it right away, or if you should hold on to it if it's a part of a larger pattern that's happening. It's easy to tell that when you're looking at a lot of time frames at the same time. So I always try to do that. And all these charts are linked together, so they're all Amazon. They're all the same symbol. Okay. So I would use the daily chart to let me know whether we're going up or down for the day, the 15-minute for the trend, the 5-minute for the momentum, and my 1-minute is for entry and exit. The smaller time frames, the 5-minute and the 1-minute, I don't necessarily look at those unless I'm actually going to get into a trade. Most of the times, just by looking at the daily chart, I can tell what's happened on the smaller time frames. So on this daily chart here in Amazon, you get this new high that it printed up today and then came all the way down. I could tell that just by looking at the daily chart and not needing to look at all the other smaller time frames, right? So if you look at Chipotle, it would be the same thing. You get this nice move up and then somewhat of a small pullback. And you look at all the other charts, you get a big move up and somewhat of a small pullback. So that's how I would use the daily chart. The 15-minute chart's a little bit different. I would use for the trend, right? Considering that I know that on the daily chart that we're going up for the day, on the 15-minute chart, I would try to understand how strong are we going up for the day. And on this was very strong because we never even pulled back to this 8-period moving average today. Pretty much we've been, all the way up this morning, small pullback, goes up again, trades sideways into the moving average, and now it looks like it's starting to pull back. So that's how I would look at the trend there on the 15-minute. The 5-minute would be the same thing almost, but on the 5-minute, the trend, because I already know that we have an uptrend for the day, I already know that it's strong on the 15-minute. On the 5-minute, I would look for where's the momentum going. Are we going up immediately or are we going down immediately? And if we're going down immediately, I would look on the 1-minute to see, is it possible to short this or participate based on what I see happening on the 5-minute. Now, if I wanted to short this, obviously, your short position would not last very long just because you still have an uptrend on bigger time frames. And that's the beauty of using the time frames, is that it allows you to see that, hey, yeah, maybe you're shorting something on the 1-minute, but you can't hold on to that trade forever because on the bigger time frames, we're going up. Right? So that's one good way of using multiple time frames. It allows you to know, how long your trade's going to last for. The other thing is it'll keep you out of wasting time, right? So if you were just using just one chart, right, and you're looking at a daily chart here, you probably wouldn't need to go to Google to see what's going on for the day because you had somewhat of a big gap up. It was a solid green bar at one point, and then it sold all the way off. Right? So let's look at another chart and try to make this example a little clearer. So if we look at Tesla for today on a daily chart, it had gone up at some point and then now it's just coming all the way back down. Right? So if you look at the smaller time frames, you would see the same thing. And the going down must have been pretty strong because this is a pretty full bar. Right? So if we go to a smaller time frame, we should see the same thing where it went down today and the going down was pretty strong because we had that big red bar on the daily chart. Well, not a really big red bar, but a sizable bar, right, on the daily chart. And that is just how I use the time frames, mainly the daily chart. It'll save you from having to look at 20 different symbols on 20 different time frames. If you look at them on the bigger time frames, it kind of helps you just weed through, especially as you understand candlestick charting patterns a lot better, knowing that this was somewhat of a medium move down today. I knew on the smaller time frames that it would be going down, and on the 15-minute it would just be a downtrend. On the 5-minute I would be looking for how strong that momentum is. Is that momentum still going down or is it going up? And if it is going up, how much time do I have to participate if I were to go long on the 1-minute? Right? And you have to do that according to your own trading style and just how you see the markets. But this is a small example on how I would use multiple time frames. Thank you for your time.